Hello, everyone. Welcome to Smart Investing. I'm Albert, host of the channel. Thank you guys for watching. If you're just tuning in, this video is going to be about the continuing sector of the financial services, which are the banks. The banks that I am reviewing, the ones that I analyze, they're pretty much, a lot of them are US. The application that I use, again, I'm just stating my sources. I'm using Webull, like always. What else can I say? I was gonna say I try to do international banks. If they come up, they come up. If they don't, they don't. Um, Again, I know the list is not, and I've been doing like this sector for like the longest. It's taking so long. I know it's hard to complete, but I will complete it eventually. And I know my videos are long, but it's to try to just do as many stocks as I can in one shot. Because if I do five at a time, the videos, you know, it's just gonna take me longer. I could do in 5 minutes. I could try to do five stocks, but it just takes a longer process. I just rather do a longer video. I hope you guys watch the full video. Like, if not, if you can't watch the full video, again, I just recommend, and I put it in my description for my about section. I think I'll start putting that in the descriptions from now on. Please watch this at the speed of 1.25 speed, so that way the information is faster. My talking is faster. Everything is faster. You could also do 1.5 speed. That is also a really good option. So you can hurry up, and I don't want to waste people's time. I just want to get fast and accurate information, and more views like that. Also, quality, you want to have this set on 420p or higher. As for viewing mode, you want to have this on full screen. Again, I record on my videos on my mobile phone. I prefer the mobile phone because I think it just has a better feel to it. If you're on the laptop, please again do this on full screen as well. But I recommend watching this on the phone, cell phone, obviously, for a better experience. So with that said, I'm gonna start the video off of the disclaimer. I'm not licensed or insured, so if you're gonna risk and try the investing or trading and stuff like that, please know your risk tolerance. This is not investment advice. And again, I state this because I don't want to get sued. I'm not allowed to recommend anything. A lot of people that do recommend, they might not be licensed or insured, but they just like talking about it. But again, this is for education and then for insight and to help you with research on stocks, because again, I'm not allowed to fully recommend anything. And if I do, I can recommend for you to watch it. If you do intend on buying it, I might say it is a good buy. I could say one thing or the other. If I do say it's a good option to buy, um I usually say that because it might be good in the future, or it might be, good to sell in the future. Um, or it can be good in a few days, or it's just a time frame that I cannot really state as well. Like, if you ask me for a price, I can give you a range, but I can't give you a specific. If you ask me for a certain date, I can't give you a specific. So again, the reason I say that is because I'm not licensed or insured, so I can't give you specifics. I mean, I try to initiate that, but based on my content, I can't, because I don't want to get sued. But again, I can't get into specifics, even though I try to throw out main points, and that's the best I can do. So I guess you guys can just roll with that. I hope that helps. I mean, I wish I could give you, but I can't. I just can't get into specifics. So with that said, let's just start this off. I know I'm talking too much, so let's get on with the show. So I'm only gonna do 10 stocks. Again, this is not alphabetical order. Maybe in the following years, I can organize this better, and hopefully you have a better experience. And maybe I can arrange it in price as well, or maybe Weeble can give me that feature later on. But again, it's just so hard with the information that I have. It's hard to organize this. I do have another site that can organize this better, but it's just harder to organize it because everything is all over the place. That site is actually called finviz.com. I use that a lot for technicals. Again, finviz.com. Everything that I do recommend, it's free. No hassle, no anything, no price that you have to buy, no free trials, no nothing. I try to get the best information, accurate and free information, because that's the way I started as well, and I do appreciate valid and honest information, especially when it's free. That's very, very helpful, and I got to be grateful for that. So I'm just passing on the same thing, and to the best of my ability. So let's begin. Let's start this off. So I'm doing 10 stocks, starting with SBT. Again, as you can see, they're at 6.5. Today is March 3rd, 2022, Thursday. I forgot to mention that. I know that's in the description, but I like to mention that in my videos. So we have a market cap of 327 million. They are small cap. Volume. That is not a lot of volume. So we have here a price point of 4.3 and lowest. Sorry, I meant to circle this. 4.3 and high of 6.5. That's not a big range for 52 weeks, so it's only like a $2 move. That's not a lot. This I like. It's not too bad, but overall, I don't like it for the long term. Now let's look at it for a short-term perspective, and also they don't pay dividends, as you can see here. Nothing. Let's skip to that. So, doing a fast research. Let's look at the 5-year downtrend. 1 year looks like it's on an uptrend. Last 3 months. So they reported. Come on, I don't know why. So let's do earnings. So they reported earnings on the 3rd. I don't really care. I mean, not me, but looking at it from my perspective, I don't really care if they beat earnings or not, or revenue or not, because we're in a volatile market, which means anything goes. I mean, people say nowadays earnings matter. I don't think it matters. I think basically it's a stock picker's game. A lot of these, capital firms, again, if they like it, they like it. They don't, they don't. Based on the buying and selling of those big institutions, they seem to like it, so that's why the stock has gone up. That's just the truth of the matter. Again, the past 2 years, it's anything goes. No refs, no rules, no mercy. So that's the way it is. That's the way I see it. I call it like I see it. So let's look at the 1 month. Again, slight gain. Volatile this week. So that's that. Short term, I do not like this stock. Analysis, technicals. I'm just gonna skip right to it to the most important info. So we have here. So we have a break of 575. Sorry, we have a break of 575, and then the low starts to break out around. So it started here. So that's around of July of last year, and it only broke out a little bit. See, the chart looks okay, but when you look at the price, it's like, wow, it's not worth it. So again, this ain't worth it. But let's look at the. I'm not even looking at the financials. I don't like the stock from experience. I know. So are they an international bank? And they do what? So when I look at the company, so okay, 26 branches. So we have San Francisco, LA, Cali. So we have East Coast, West Coast, Michigan. That is like north, up north, not too far from New York. That's about central. Yeah, that's about the central U.S. So they are a U.S. company. And that's that. So I don't like this company, long term or short term. So let's move on to the next one. This one I like, AVAL. This company is a dividend paying company. And what you're going to love about this is that they are the only bank that I've seen. They are a monthly paying dividend company. You can expect not to get a lot on price, but their dividends are very consistent. Very consistent. So we have here a chart of the 5 year. As you can see, again, in 2020, went from 860 all the way down to like $5. Went up in December of 2020 all the way to like $7. So now we're down to about 560. And as you can see, the downtrend from 2020 all the way down till now. So it has not broken 2021 forecast. Let's look at the 1 year. As you can see, consistent paying dividends monthly. Again, you're not going to get a high return on the price. So the range on that price is, so we have a 52-week high and low of $1.50. That's the difference. So what I did was subtracted 662. Come on. Where's the decimal? It's hard for me to write a decimal. Minus 5. Come on. Sorry, I'm having difficulty writing the let me start this again. So let's just do this. Oh jeez. Bear with me, guys. Please bear with me. Okay, here we go. So we have minus that. So that 12. So carry the 5. So we have 7. 6. 6 minus 5 is 1. So we have $1 and a difference of $1.67. That is the difference. So it's been like that for months and years. So telling you now, you're only gonna get in a few years $2 difference. Undervalued. As you can see, PE 6.72. I know you guys might see this PE like, wow, that's a high PE, but those are future in the future. That's what our expectations are in the future. So I don't really look at that. I look at the now, at what's going on right now, because that might change. So I don't really believe in, like, again, earnings and estimates and, oh, this is going to happen in the future when things have been going like crazy. And if you all have been paying attention, Facebook has dropped tremendously in like the last month. It made history going down 25%. in one day. That's never happened in stock market history of that market cap of that big of a company. So, anyways, let me shut up and just continue with the video. So again, I was saying monthly dividends. You're gonna get a 1.67 cents difference. That doesn't matter. Let's look at this chart here. So apparently from the Webull chart, it says it's in a breakout. I don't really see that. What I see is the last few months. I don't like looking at the year so much. So I look at the whole year. Then I split this in half. I look at from here to here. And then half of that would be the 3 months. So let's look at the 3 months. We have that, and that. A W. You have the W. Keeping it simple, guys. Just keeping it plain simple. So with that W, again, it has to cross this line. It has to cross that line to get there. So how much is that line? We're going to find out right now. So we're looking at about $6. So it has to cross $6. It seems like it's close enough by looking at it on the chart. But again, this is a very cheap stock. It's hard for it to break out of that. So to each their own. Earnings are steady. I've seen this company before. Again, earnings yield of 4.11. Now, let's look at the dividends. Show you guys the dividends. This is actually a Colombian bank. So, basically, they don't give raises. But again, as I mentioned, you're sacrificing capital appreciation, which is the rise in price or the downfall in price, which is like the difference between how high goes the range and how low it goes. So you're sacrificing price and dividend raises to collect monthly dividends. Again, to each their own. If you like monthly dividends, this may be a nice stock for you. I don't know. It's up to you to decide. If you want to break even on your price, like I say you got in at 550, I can't really say, but I'd say you have good chances to break even, to get out around the same price, long term or short term. So, as you can see here, they have 2 cents, 2 cents, 2 cents. Then you have all the way down. All the way down, we have 2 cents. Do they have any splits? Sorry. Let's look at splits. Let's move this over. Look at the splits. No splits. So again, nice volume. If you like this stock for dividends, monthly dividends, to each their own. Can't recommend anything further than that. Next up, PNBK. We have here, I don't like the volume, earnings per share, 1.2. PE is at 12.56. Looking at the chart, let's look at the 5-year. It needs some work. 1 year for this year looks okay. I like that jump. From there to there. I like that. It's got some momentum. So now let's look at it for technicals. Looks pretty good. They do not offer a dividend, so this looks like a growth stock. It needs more volume. Needs more interest. Nobody likes this stock for now, but even though it's gone up pretty flat, that's still a good sign. Watch list. I recommend this as a watch list. Do they pay dividends? Let's see. They did have a split. 2015. And dividends, let's see, 1 penny, 1 penny. The last time they gave dividends was in 2019. So maybe they sacrificed the dividends and got rid of it to grow the company and grow the shares. So PNBK, I'd say no. I would not watch list it. I don't like it. So yeah, that's that. Obviously there are better ones than that one. Next up is CM at 126 and 14 cents. Nice volume. I like what I see. Earnings, I like what I see. Dividend, I like what I see. Definitely a watch list. Definitely. The share price might be too high for some people. Again, it's hard to find cheap value. But for the price right now, this is undervalued based on the PE. Has a low turnover rate. Very low. That's really good. And slowly gaining momentum. So let's see the 5 chart real quick. It's gone up. This is definitely a good stock right now. Let's look at the dividends. Let's see here. Last time they had a split was in the 90s. Dividends. This is a Canadian company, actually, just by the currency. I already know. They are giving rising dividends. We can see here. So 1.4 to 1.44. They raised it in 2020. In 2021, it stayed the same. In late 2021, it jumped up 20 cents. That's a really nice jump. Really nice. You rarely get companies that give out raising dividends that high. You rarely see companies that give out more than 7 cents each quarter. So in a year, we're talking about 7, 14, 21. A 28 cents difference for the year. You rarely see that. That's very hard to find in companies. So again, just what I thought. Canadian company. They're really good, I guess, at what they do. They're really good. So definitely watch this company. They do wealth management. Okay. What else they do? So as we can see here, this is what I like to see. I'm just browsing through. So this is what sticks out to me. This here. Individuals and families. High net worth. Entrepreneurs. So it's like I'm sharing my homework with you guys. I have the information already presented. I'm just showing you my homework. Private wealth services. That's a nice term. I like that. Those are terms you want to see. I'm keeping it simple for you guys. I don't even have to look at the financials because what I have here tells me that it is a good company. So I don't even have to look at the financials. So definitely in a good company. Next up that I have is WAFDP. So we have here nice yield, nice dividends, decent earnings, cheap price. PE is low. Volume, what we have here, not bad. Look at this drop in the 5-year. That's a long drop. So now let's go to the 1 year. Boom. Now's a good time to jump in. So we see, let me see, the last 3 months, they have lost a total of 13%. That is not bad, but you could wait for this little drop there, see if it breaks down to that level. So now we're going to see what that level is. 21.87. Like to round off to 22. I'd say 22 is a really good price. Not to be greedy or anything, but I think that's a fair price. Rounded out lower. 22 can definitely be a possibility. If anything, you can keep rounding off the 10 cents mark. So 22.10, 22.20. But I like to round off usually by quarters, or usually quarters and 10 cents mark. By the pennies, I don't like rounding off by the penny. That's just, I don't know. That's just me. It's just, I like rounding off. That's just my perspective. So we have here dividends. Let's look at the dividends. So they started to pay. I love companies nowadays that are starting to pay dividends. That is definitely a good perspective. That is definitely a good thing to see. Ever since 2020, there are some companies that are jacked up in prices, jacked up in earnings. Everything's inflated. But when the company means well and they like to pay investors, that's definitely a good sign. That shows that they want people to invest in their company. They want people to be interested. They want you to be a part of their business. So when you see, especially a raise like that, you have 22 cents and then 30 cents. That's definitely a good sign. Definitely a good sign. Uh, let's see what country is this company, but I add this to the watch list. It's definitely a good company. Definitely. So they are in the U.S. It says 224 branches. What I would like to see about this company to improve, I like to see something that says online banking. I know banks traditionally they have physical locations. Um, I don't mind physical locations, but again, my opinion does not matter when it comes to uh, determining what the business decisions are. I prefer both physical location and online banking presence, and a really good online banking presence. Some people are more traditional. Some people prefer online. I like both. But I do want to see an online presence. Um, I know I like major banks. I don't know what people think about smaller banks, to each their own. But I don't see anything. Hold on, let me move this. I don't see anything in this description here, anything at all, that says online banking. But again, that could always be research. That could always be looked up and stuff like that. You could always Google it or go to the site, research it, see if they actually have online and whatnot. I don't feel like going through that. I don't have the time to do it in this video, but if they do, they do. They don't, they don't. But if they do, still. So they seem like a good bank. So next up that I have is CHMG. Let's look at that one. And we have here, looking at the numbers, I like what I see. There's just no action. There's no action as of now. No action. That's why I looked at it and I could tell no action. Look how flat that is. And mind you, I said that before I even clicked on the 1 year. So I already knew by those numbers that was already flat. I already knew it. So 5 year, I don't know. So they dropped in 2020. So then they went up. Then they went flat. They're not making new highs. So I don't know. I was gonna say watch listed. Maybe it might go up. It hasn't gone down, which is good. If it's flat, to me that's a good sign. There's just no interest in it as of yet. But, and I mean, when I say interest as of yet, and I mean short term, and again, that's like less than a year. But for the long term, this is definitely a good company. Definitely for the long run, this is definitely a good company. But first, let's see. Do they have any splits? And they have no splits. That's good. And do they have rising dividends? They do have rising dividends. That's a good sign. They're not consistent with rising dividends, but they have been raising it only in 2021, as we can see here. So they raised it in this past year, only 5 cents. So if you like steady dividends, go for it. If you like rising dividends like I do, there's always something better. So yeah, I wouldn't watch list it. I wouldn't recommend this. For the long run, there's better ones. For the short term, maybe. But for right now, for the short term, CHMG is just not clicking. I just don't see any action in it as of now or this year. I could be wrong. Let me take that back. Not for this year, but I'd say next few months. We'll see in the second half of the year if it kicks up or not, or maybe next quarter. Who knows? But once I don't see it for the year, I don't see it for the year. I'm more of a yearly guy. Quarterly is it's a lot to handle. I need more people on my team to look that up. So we have here BSVN Bank 7. Cheap stock. I know people like cheap stocks. What can I say good things about here? Undervalued. They are paying a dividend. Earnings look okay. The chart, I like it for the year. They're consistent with dividends. Let's see. What do they do? Located in Oklahoma, Kansas. Nice. So they do pretty much farm lending, farm loans, or a lot of like ranch and big acreage type of investments for commercial property, I guess, for farming. So let's look at their dividends. Do they pay rising dividends? We have here yes. So it looks consistent. They paid a special dividend something. That's your bonus. You guys, that's a bonus pay in 2019. Love those. If you see my videos, I love special paying dividend companies. I wish they were more consistent, but it's hard to find those as well. So what else am I missing? Did I say the split? Or did I see the split? Nothing. So let me see. No splits. So let's see. So for long term, 1 year or more, they look good. They look good, but the dividends are okay. So I'll leave that decision up to you guys if you like it or not. Looks pretty flat. Looks pretty flat. Look at that flat chart. If I'm gonna get any returns on this company, let me look at the 52-week high and low. What is the difference? So we have difference of 11 bucks. And is it at 24 right now? Close to 24. I'd say stay away from it for the short term. It's pretty flat for the short term. BNS, Canadian Bank. I've heard of them. Very good bank. Hands down, Adam. You definitely want to eventually invest in this stock. I like them for income. They're really good for income. I don't have them in my personal portfolio, but I've heard good things about them. Canadian Bank as well. I believe they're Canadian. Earnings are great. Dividends consistent dividends. This definitely a stock you want to add to your portfolio um, for the long run. And then for the short run, um, you can get small gains on this. Markets are very volatile the past 2 to 3 months lately. Um, I don't know if overall the banks have been going down. Um, let's see the dividends real quick. They have been paying rising dividends. So let me look at the split. You definitely want to add this to the watch list, like I said, for the short run. If you decide to get in and out of this trade, I would suggest waiting it out. So this company, they are providing in Latin America. So I was wrong. They're not a Canadian bank. I thought they were. Um, oh wait. I guess they have a segment. Um, they have a segment in Canada. So I just can't think if the Canadian bank is corporate or if I think it's corporate, but I could be wrong. So but I know they have a branch and they're affiliated with Canada very heavily. And they do global wealth management and they do it very well. I know that segment is really really strong and really really good. That's what they're very very good at. So yeah. Next stock up that I have. Let me move this. Sorry about that. Only have a few more. So we have FSEA. Um, I don't really like it. Short term or long term, stay away from it. I don't like those flat lines, as you can see. A lot of flat lines. Flat line, flat lines, flat lines. No. Stay away from this stock. It's awful. So we're gonna see profile. Where are they located? I wouldn't really say it matters because they're not all that. They're federally chartered holding banks. So stay away from this stock, guys. FSEA, awful. Pay no dividends, just awful. Next up, ESQ. So 1 year chart, I like it. Let's look at the 5 year real quick. Looks good. Volume is low, but that's not too bad because maybe he had interest a few months ago because it was flat. Flat here, went down, went flat, then went up again, went flat. And it broke this line here. So we have the Batman. Sort of like a Batman. You have like a Batman looking chart here. So earnings, I guess they went up for their earnings. That means people liked it. People liked it from that point on. I don't really care if it says earnings. People liked it from that point on. But guess what? It went down again. So what date did it start going down? Let's look at that date. So that was around February 9th. So let's look at the 1 month. In 1 month, sorry, let me just do that and that. Okay, so in 1 month, we have here a loss of 8%. That is pretty big. But again, the stock seems okay. Um, Seems like a good watch list. Wouldn't invest in it as of yet. Hopefully they pay dividends. If they do start paying dividends, that would be a good sign. Definitely a good sign. And the earnings are definitely a good sign. 52-week high and low, that's not bad. It's got some movement and some decent range. So, stock looks pretty decent. I'm almost done. I'm gonna wrap it up. Thank you guys for watching. Sorry to take up so much of your time, but I like um, evaluating as much as I can to get you guys as much information and honest information as I can. So ESQ, I say watch list it for the long run, short term. It's not all that. Thank you guys for watching. I will see you guys in the next one, and I will continue the banking sector and more videos to come. If you have any comments, questions, suggestions, any feedback is welcome. If you want to share it as well, you can as well. Or if you want me to make this video shorter, I'm sorry. I apologize in advance. I know this video is kind of long, but I will try to throw some information in the description and cut that short and start evaluating and more make a better evaluation, a quick peek and a quick checklist and check marks to tell you and let you know if stocks are good or not. I'm still trying to come up with a solution for that, and I think I have the solution. I just have to apply it to my description, and I'm gonna have to do that, and I will apply that one day when I have like a week off or 2 weeks off or something. You guys will get notified, and I'll even make more videos on that. So again, thank you guys for watching. I will try to state good interactions and good information on the description, so you don't have to watch the video. All you have to do is click the description, like, subscribe. Thank you guys for watching. I will see you guys in the next one.